Good afternoon. Transaction Capital says its full-year earnings rebounded to well above pre-pandemic levels. Core headline earnings from continuing operations was up 27% from 2019's pre-COVID levels, following the Competition Authority's approval of Transaction Capital's additional investment of 24.3% in WeBuyCars in early August. The group has been able to consolidate 74.2% of WeBuyCars' earnings for 2 months of the financial year. For more, we're joined by CEO David Hurwitz. David, thank you so much for your time. Take us through the period that was for Transaction Capital. What were the highlights for you from a financial point of view?
So much for having me on the show today. A really good performance this year, really driven by, I think, a recovery in our core businesses back to levels that we saw prior to COVID. If you take a look at our TCLS business, there we've seen that business grew by 15% above 2019 levels. And really what we saw was the fantastic recovery in our ability to both buy debt from our clients, being banks and retailers who have more non-performing debt to sell than ever before. And number two, to collect on that debt. And we see that the South African consumer is really resilient and still able to catch up on their non-performing debt. So very happy with that. Obviously, this outstanding highlight was our investment into WeBuyCars, which you have already have spoken to. There we have hit new records in many areas, in the number of vehicles bought, in the number of vehicles sold, in our e-commerce sales. Previously, before COVID in 2019, we hardly sold any vehicles online. In 2020, that went up to 14%, and we're now sitting at about 30%. We've also broken records in the number of vehicles sold to consumers online. And then finally, a really big focus in penetration of finance and insurance. When you sell a car, you obviously want to sell an add-on product. So record set across the board over there. We have a target to try sell 10,000 cars in the medium term. I think we'll get there in the next 2 to 3 months. So we've revised that target to now to be to 15,000 vehicles per month over the medium term, which should be within, let's say, the next 18 months or so. All right. And then lastly, in our taxi business, that's the sector which has taken longer to recover, and there our earnings are only reaching 2019 levels.
Right. So let's talk a little bit about the SA taxi business. I mean, what patterns or I suppose trends have you picked up, especially in this extraordinary time that we find ourselves in with the lockdowns and the July unrest that was unfortunate that happened in July? What did you pick up when it came to the SA taxi business?
So I think what we've learned about the minibus taxi industry is that it is absolutely indispensable to South Africa's recovery. We know that about 3/4 of all South Africans use public transport. And if you look at public transport, minibus taxis are roughly 85% of all public transport trips. It completes 15 million trips per day. And bus and train complete less than 1 million commuter trips per day. So what we've learned is that minibus taxi is indispensable to South Africa's economic activity. And hence spend on minibus taxi is non-discretionary. For these reasons, we saw this industry recover relatively quickly, but in the second half of this year, we kind of had 3 elements impacting us or impacting the country at once, and specifically the minibus taxi industry. We had a more severe and longer third wave. We had the civil unrest in KZN and Gauteng, and then specifically to the minibus taxi, we had unrest in the Western Cape. And all of that kind of hampered or dampened minibus taxi activity. We saw about 90% of our operators were operating during that period, a kind of late June to mid-July. And that unfortunately kind of delayed the recovery of the minibus taxi industry. So I think we've learned that it's vital and that it will recover. It's not discretionary spend. If you look at kind of air travel for leisure purposes, that ain't coming back as quick as minibus taxi. But it hasn't recovered as quickly as our other 2 businesses.
When it comes to the TCRS business, what sense are you getting when you look at it from a credit point of view, given the background that we find ourselves in? Is it showing strain, or are you starting to see a recovery?
Yeah, so we've seen a much stronger recovery than I would have expected. The beauty of this business, I think there are two factors that help us significantly. The first one is that banks and retailers, as they now start repairing their books and collecting again, really need our help. We're a very efficient tech-based collector of debt, and our clients, being banks and retailers, have more non-performing debt than ever before, and they also have disruption to their call centers. So we are well placed to take on work. I think that's kind of the first thing that we see. The second thing that we see is that we are able to price for the work. So when we buy a book, we will buy that book with an expected recovery in mind. So in a good time, we might have to pay whatever, 30 cents in the rand to buy a book. But in a time like this, where we see more consumer stress, that 30 cents in the rand might drop to, call it 20. And what we'll do is we will lock in a specific margin. So our yield would be lower in a time like this, but our price would also be lower. And you know what that does is they kind of move in tandem, and you can lock in a nice margin. Well, the same margin you would typically lock in.
David, thank you so much for your time. That is David Hurwitz, who is the CEO of Transaction Capital, giving us a sense of the period that was, and also talking about what the consolidation of the WeBuyCars business means for the group.